So, good afternoon, everyone. As Mike said, my name is Stephan Dreyer. I'm Managing Director at ANA, which is the Association of National Numbering Agencies, an organization that is promoting the adoption and implementation of standards within the capital markets. Tokenization is something that we look at very clearly. Kelly ended the last panel with a very optimistic comment that there is progress being made. It'll be interesting to see what the panelists think today as we shift. Well, we stay on the topic of institutions, but focusing more on tokenization. Are we making progress? Are we not making progress? What is working and what is not? And then what are the things that we can do to help fix that? So we'll take a real honest assessment of what's going on. I will ask my panelists to please introduce themselves and tell us a little bit about the work that they're doing in the tokenization space, but also to share their views on, are we making progress? Is it sufficient? Are we on track maybe only, or are we behind? Is there a lot more work to do? So starting at the far end, Dotun.
Brilliant. Nice to meet you all. So my name is Dotun Rominyi. I'm the Chief Technology Officer and Chief Product Officer of Assetera. We're a regulated MiFID broker based in Europe, in Vienna, and we're focusing on distribution for regulated securities within the tokenized arena. So yeah, great to see you all today.
Hi there, my name is Aaron. I'm Head of Investments for VanEck, where I look after portfolio management and co-head digital assets. For the ones that know us, we are a global asset manager. We manage approximately 175 billion, of which 31 in Europe. We're mainly known for being an ETF issuer. And we got enthusiastic about Bitcoin and blockchain technology back in 2016. And since then, we've launched a lot of strategies on that theme. We have crypto ETFs, we have crypto ETNs, we have active strategies, liquid token funds. We've been investing with our own money for years now in early stage projects. We're running a VC fund, and last but not least, we've tokenized the money market fund not too long ago, and we're looking to do more from that perspective.
Hi, I am José Ángel Fernández. Thank you for having me here. I am Head of Innovation of Prosegur and also CEO of Prosegur Crypto. Prosegur is a giant company, 6 billion. It's the largest custodian of cash all over the world. And Prosegur Crypto is an institutional custody solution having brokerage and also tokenization for corporate and institutions. It's very complicated to have a startup inside a big corporation, very conservative, as many others came before to say. And we are pretty happy to start this year with new business, new contracts all over the world. We are very strong in Latin America, and we are also regulated in Europe and in some countries in Latin America.
Hi everyone, Nadia Filali, I'm Chief Innovation Officer of Caisse des Dépôts. Caisse des Dépôts, it's a very old public bank in France. And we work on the blockchain and crypto aspect for 10 years now. We are, for example, the custodian for the French government as a CASP. We work on tokenization of assets with different banks, even with BNP. And we put the subject of tokenization and stablecoin in the new digital strategy roadmap that will be announced tomorrow morning as a pillar of our new strategy at the European level.
And good afternoon, everyone. So my name is Julien Clausse. I'm heading a department called Asset Foundry, which is actually working on all things related to digital assets and tokenization for BNP Paribas CIB. So I'm part of the CIB of BNP Paribas, and actually working with all the business lines within CIB, from origination to distribution to custody, and now even beyond with cash management and asset management. As we know, this topic is fully transverse and multi-asset. We are looking at financial instruments and tokenization of financial instruments, so we don't deal with crypto. But it's really about understanding these new rails. And usually I'm taking a metaphor, and I'll do it very quickly here. But it's like the rails and the train metaphor. So you've got rails that have to connect as many train stations as possible, on which you have trains, which are the tokens. And these tokens can be permissioned like the Eurostar, for instance, or permissionless like the underground. And then you got services on top. And the services are the financial services. So we're looking at these 3 layers. We've been doing issuances for a few years now. The first issuance for security was in 2022 for project finance. And we've done multiple issuances since across multiple asset types. We've done delivery versus payment with the central banks as well in the experimentations last year. We've tokenized some fan shares as well. So I'm sure we'll cover all this topic, but basically that's really about tokenization of financial assets.
Great, thank you all and welcome. So didn't quite get the last bit there. Let's do a rapid fire real quick. Tokenization, are we making progress? Is it sufficient? Yes. Are we on track, or is there still a lot more to do? Quickly.
Yeah, so in my mind, I think we're making progress. If we sort of look across the landscape, I think some of the harder problems to solve in tokenization, specifically in the security space, is really around asset structuring. So how do we ensure that we have the right sort of legal structure around these instruments and their fundamental issuance to make them compatible with delivery and propagation and lifecycle management on a distributed ledger. And I think we've seen some real strides in that respect. Some of the challenges are, the variations in sort of legal frameworks, variations in jurisdictional rules around these assets across different countries. But also, I think with respect to that, it's thinking about how do we ensure these assets are seamlessly accessible across different geographies. And I think we've started to see, a lot of strides, a lot of progress made in some of these areas. There's a lot of room for growth within that space, but I think there's work to do. I think the big challenge I think that we'll see next is really going to be one of distribution. How do we get the assets out there? How do we make sure that investors can get them into their hands? And I think there are lots of challenges that we still need to overcome.
Yeah, I agree. If you look at the structure, right, that's the thing, because we've seen in the past few months a lot of stocks and funds being tokenized, which I think was fantastic to see. Credits to those companies doing that. I mean, they're really pushing for innovation, so that's great. But what maybe not everyone realizes, and to your point, is that most of these tokenized stocks and funds are, they're not providing, let's say, the end investor with real ownership of the underlying. There's embedded counterparty risk in these structures. Yeah? These are just debt instruments or certificates. And I think that's an issue, because today we're talking about institutions, I think, and whether they adopt to these kinds of products. And I think if I take one step back, if I look at ETFs, for example, those are clearly products that institutions trade. And why is that? Because they are cost effective, they are liquid, easy to trade, they make the underlying more liquid, by the way, something tokenization in general can do as well. It's all of that, but it's also the fact that they are highly regulated and they are well structured, they provide for proper ownership, and that's something I think that needs to change. And maybe I'm going a little bit off track here, but if you can think about making things quicker, making things cheaper, but you also need to have products that are maybe better aligned with in the investor itself. And one example I always like to give, and then I'm staying home again with ETFs, is that one of the criticism that we get a lot is that we are being too passive. We do not really vote actively on the underlying companies, their meetings that we have in our portfolios. And that criticism is justified. It makes sense, right? We're not doing a good job from that perspective. And we cannot do it any better because the current rails in TradFi make it completely impossible. It's too difficult to do that better. With blockchain technology, however, what we can do is that anyone holding an ETF token in their wallet, and whether that's an institution or a retail person, doesn't matter, they will be able to vote on all the underlying companies, their annual meetings. And if we're able to do that, then we are really making better products, and then institutions have to start buying them. So we need to make better products.
Okay, I agree with you guys. Just a story, a short story. A friend of mine tell me one day to innovate in finance, first, possibly legal, second, technology feasible, and third, a good business, perhaps, in this order, right? So we have the technology ready, we have the legal trust ready. Now we have to test the market, so the commercial traction. This is something, at least in Europe, is not working yet. This is my opinion, right? I think we are ready. So the tokenizator, the company that tokenize this asset, this kind of assets, has to be the trust of the market, because technology is commodity here. Everybody can tokenize, more or less. You understand me, right? You have a lot of API, you have SDK, a lot of things. Even the custody, as Leo, my colleague said, is a commodity. It's just technology. You have it, you put more layers. This is all right. But you need to test how long is going to be the demand and the offer, right? This is the key point. Now we are testing in Spain. We are the first fully licensed company in Spain to offer tokenized asset class, this kind of asset class. So we are very happy to start this during this year or early next year with the first prototype of this kind of products. But to be very honest, my company asked me, how is it going to be? I don't know. Nobody knows, right? This is, at least in Spain, this is my track record.
My point of view is that we discuss about this subject for since 8 years now, and it was difficult in the beginning because there is no. We don't onboard the top management of the banks or of the asset manager because they don't understand why they will change something that it works already. And now we move on the technology, and the technology is more mature to work on the tokenization. We move a little on regulation, and we move on one aspect that is really important here. It's the cash leg with the central bank who are all working on the CBDC, and some of them, and particularly in Europe, that began to allow the development of commercial settlement stablecoin or deposit. And there is a pain point here, is that the volume is not here. So I think many of us, we have done one or some issuance on the market, but it's not sufficient to have a real market on that. And you need to have a second market also, and you need to onboard all the chain of value on those subjects. So for the moment, we are like as a re-begin of a new cycle on tokenization of assets. I hope it's the good new beginning of this point, but it's like there is a buzz on tokenization now. Perhaps people are more mature on the subject. There is a better acceptance also on this subject. And because we have competition between Asia, USA, and because Mr. Trump using stablecoin as a budget policy tool, perhaps we will move faster in Europe, and I hope so.
And so are we making progress? Yes, we're making progress, as in it's a very long journey and we're moving in the right direction, but the journey is still long. I'll take a step back. What we're talking about is a new business architecture. Okay, that's what it is. It's not about technology. It's about a network on which everybody can connect to and interact with tokens and provide services on top of these tokens. So it's like a token economy. So if you're familiar with the API economy and these kind of things, that's a kind of this kind of shift. But honestly, it's a new business architecture. So it's a mental shift. It's about mental fixedness here and how we move away and along this new business architecture. And usually it's a generation, and a generation is 20 years. The beginning would be 2015, okay? So 2015, 20 years is 2035. So we're halfway. Having said that, and it's still very early, it's still nascent, and I'm sure we'll talk about that, and it depends on the product. As it's a business architecture which is totally new and it impacts the overall chain, the overall value chain, all these years are needed to tackle the understanding of what it means and what the impact is and what is the value we can provide to the market thanks to this technology. So although it's still nascent in many ways, we have to move now, if not a few years back. And that's why we started, I think we all started a few years back, because we understand that it's really a new paradigm, a new value chain. I talked about the rails and the trains and the services, and interestingly, in terms of progress, in the past year, it used to be bundled. Like all the players in the industry were willing to build the rails, build the trains with their own services, which obviously, is very hard to push to the market because it was fragmented, it's not interoperable, etc. So we saw now the unbundling, and the players understand, okay, we need the rails first. And I'm not even talking about private or public chains here. We need rails that are connecting as many train stations as possible. And we need to operate on these common rails. So there's a first consideration. And again, one size does not fit all. I'm usually saying, the internet has given the businesses like Uber, Amazon, and Netflix, they're all different businesses. And we tend to say that digital assets is all the same. No, it's not. Started with crypto, then evolved to stablecoin, then MMF with settlement, for the stablecoin. Then I'm pretty sure we'll see the securities. We start to see repo as well with smart contracts. So it's all about composability, but it will be built in steps. We all have the end game about the composability and ideally all happening on chain, instant settlement, with smart contracts available, etc., etc. But it'll take time, not from a technical standpoint, because I think we're all equipped from a technology standpoint. It's there, but from an ecosystem standpoint, and how we're going to work all together, what kind of services are we going to provide? And as we are seeing a single ledger across the whole value chain versus what we had before, which was lots of different reconciliations among the participants, etc., we saw lots of players willing to move in the value chain, say, okay, actually, I should be at the entry gate. I should be, at the tokenization part here. So everybody was willing to do tokenization platforms, including investors. I talked to investors willing to move up front to the issuer side. And everybody's moved back now, say, okay, no, actually, it's not because I can do it technically that I can do it, and it's my business. It's not my business. It's not about technology. It's about liabilities. It's about contractual arrangements and all the services you want to provide. So bundling this tokenization with traditional services is key. And I'm sure we'll cover that in terms of interoperability. How you connect this new ledger and these new capabilities to your traditional services. Because eventually the market doesn't care, it's a token. The investors, they don't care, it's a token. They care it's instant settlement, they can do intraday, they can be paid at the minute for dividends, they can interact with other assets on chain. That's great. That's brought by tokenization. But again, it's a security, it's a fund share, and we have to serve them in the same way as before, plus the extra features of tokenization. So I think the progress is really about, first, the mental evolutions around the ecosystem and how we're going to interact all together, as well as the technology products we've been building for the last few years. We're all connected to blockchain now. We know how to safety private keys. We all know how to create smart contracts and deploy smart contracts. We're equipped. So we're ready for the next wave of interacting all together and bringing value to the market with this composability aspect.
So it's not a surprise that we've got mixed results there. We are making progress. There's still work to do. I think that's evident in any evolution of implementation of a technology. But I think it's also important, so we've all touched on some of the things that are working, some of the challenges. Let's try and isolate that a little bit more. What is actually working here? Julien, if you could just elaborate on what you were saying in tokenization, what is one thing that is really driving and making institutional tokenization work?
So, again, it depends on the market you're looking at. So I'm sure you've been to many events these days, etc. You've all heard about stablecoin and the cash leg, and we mentioned that we need a cash leg, especially in capital markets. But again, Stablecoin, yes, might work for certain use cases, and we've seen it for money market funds, and it works. I mean, there are many players doing MMFs, etc. I'm still waiting for a €1 billion bond to be settled in stablecoin. I'm not sure it will happen very soon. And it's all about counterparty risks. So I think the ecosystem is being built as we speak, and we heard blockchain is de-intermediating. I'm sorry, it's not the case. It's not because you say it's a Picasso that it becomes a Picasso on blockchain. So you have to have off-chain players that will be trustable players to put, the instruments on chain. And the blockchain just gives trustability on the transactions. That's what it is. And we see the intermediaries being built as we speak. So of course we have the traditional players like us. So that's working. We're building the capabilities. We're serving our clients. But you saw also new players, and for stablecoins, you've got the likes of Circle, etc., or central banks as well. But to me, they're all counterparties. So the way you're going to interact in this world is about thinking about counterparties. It's very unlikely we'll interact with the blockchain directly. I think it's already being centralized. I'm sorry for the very early crypto adopters, but even if you look at the crypto space, it's already actively centralized. So it's all about setting up the players in this new ecosystem, and who will be the intermediaries. So very likely the banks, because we're trustable players, but there are newcomers, there are new entrants. So we see things that are working with the new entrants, and we've seen it on the stablecoin front. We've seen it with the MMFs as well, and the BlackRocks, and we're doing MMFs on our side the same way. That's working, and that's working because of composability, because I've got the two legs. I want to bring value. I mean, if it's only about tokenizing and issuing a security on the blockchain, so what? If I have to settle in fiat and it has to go through my exact same systems, it's actually cost me more, and it's more painful than traditional systems. So this part is, and we'll cover that maybe, it's not really working yet, but the simple instruments, the simple use case are starting to build these capabilities, and that's working, again, for very simple use cases, and we'll build on top of this along the way.
So I think it does depend, you're right, on what your perspective is, which asset class you're looking to tokenize. And we've heard, or we've seen, obviously, there's been a shift from tokenization of bonds. That was kind of a front runner. I think we heard in the previous panel from ZKB about tokenization of bonds being the early thing, and now more recently shifts into things like tokenized money market funds, tokenized deposits, NASDAQ looking to tokenize shares. Dotun, where do you see tokenized securities gaining traction? What asset class is it going to be?
Yeah, it's a really good question, Stephan. So I mean, we sort of look across a broader spectrum of asset classes. So everything from your sort of public markets listed securities that we're seeing sort of smaller firms brokering, tokenizing, and then redistributing. We're seeing a lot of debt instruments, from private credit to corporate debt, sovereign debt. We're seeing funds, structured products. It's a very broad range, and everything from sort of wholesale use cases all the way down to much more sort of professional retail, as I would like to sort of describe it. I think what's sort of interesting for me when I sort of look across the ecosystem and think about sort of where we are at the moment, I think there are two big pillars that need to be solved. I think one is what I like to sort of classify as co-opetition. I mean, ultimately, we're in a world today where there are platforms and service providers that are tokenizing assets. There are variations in blockchains that are being used to deploy these instruments. There are variations in token interfaces and token standards around these instruments. Some provide the sort of embedded compliance and rules enforcement around eligibility of transfer and other behaviors on the contracts. Others don't. There are variations as well in just the sort of structures of these networks and sort of various integrations. I think that the problem we have here, when we think about distribution, we forget sometimes that as businesses, we need to think about the proposition and who we're competing against. And in such a nascent space, many of us forget that actually we're competing with the status quo. We're competing with a legacy space whereby if you're issuing an asset, you're brokering a deal, there is no technology impediment to be able to conduct that business. And whereas today we have the contrivances of thinking about digital custody, Can you as a business manage these assets? Can your clients manage these assets? And there's a whole host of considerations that then come into the fore. So we need to be able to solve these challenges. We need to be able to think about, as we're conducting services and bringing these services into a technology space where they're interacting with these digital assets, that's a technology integration. And if you scale that up across the entire market, that's an M of N problem. So I like to think about this as sort of a coordination problem. We need coordination standardization. You see this in the traditional world with standards like FIX, which is really around trade execution, end-to-end trade execution coordination. There are other standards like ISO 222. We sort of need the same thing, but in the context of digital securities, in the context of full lifecycle management on decentralized and federated infrastructure. So that's one. And then the other piece is going back to that point of differentiation. We're starting to see the seeds of this with the BlackRock money market fund and the VanEck money market fund, and it's about taking more traditional instruments, establishing them on new rails so they're more mobile, so they can be leveraged as collateral, essentially for leverage trading in crypto markets, which is sort of it's a new use case for a traditional instrument. And so I think these are the types of opportunities that really make these assets much more interesting than where they were before. I mean, even for public equity today, in the wholesale space, it's not particularly interesting because, again, the rights and obligations don't really confer all the way down to the assets, and maybe they will when NASDAQ and NYSE get there, but not yet. But if you think about it from the retail investment context, rather than going through a 30-day onboarding process with a sort of legacy broker to be able to then subscribe into one of these instruments, and that may settle in the course of several days, I can, on my super convenient crypto app, invest in Tesla in minutes. And that's the benefit, right? You may not get access to coupons, you may not get access to dividends, you may not get access to voting rights, but it's the convenience of being able to invest in all of the assets that you care about and that you know about all in one place. And with no minimum ticket sizes, all the way down to a couple of dollars to a couple of $100. That's powerful. That's a powerful proposition. It's narrow, it's narrowly focused, but it does what it needs to do. And so I think that's where we as an industry, we need to think about how we are differentiating these digital incarnations vis-a-vis their traditional counterparts, and then equally, how are we bringing the market together so that we can really scale distribution and then following on from that in the medium to longer term, liquidity.
You just said we need more traditional funds to be tokenized, basically, right? I agree. Just to comment on that, because we've been looking into this for years. We have the money market fund now tokenized, but I can tell from experience it's not that easy. It's very hard, actually, if you want to do it the proper way. And I think you already said something, right? We need cash. We need tokenized cash to be available, because that's really a missing element. If we try to tokenize, for example, our ETFs, and we want to match the pace of the crypto markets, we want to be able to create instantaneously fund units. Well, that's not possible because we still need to bring in fiat. I heard something else as well, the secondary market, I believe, also still missing. That's all regulation. But again, it's not so easy. And there's one other thing that's maybe a little bit counterintuitive, actually. And that it's, I mean, blockchains promise that the costs of doing business will go down dramatically. The thing, however, is from experience, we've seen that it actually is way more expensive to set up a tokenized fund, for example. And that's of course something that needs to change. Of course, if there are other benefits to it, maybe it's justified. And I also believe that these costs will come down in the long run, but it's something to keep in mind.
That's right. You probably know that Prosegur has launched a couple of weeks ago a digital investment gold tokenized, right? It's a real world asset. And when we talk about the product, we say, what are the challenges, right? First is distribution, second is differentiation, and third is trust. These are the problems. Well, obviously, the problem are cultural problems in my company, but I'm aware about that. So distribution is the first one. It's very complicated. We want to be very sure if we want to distribute this product B2C or B2B2C through the banks or financial institutions. But this is something that we are thinking of still. Second is differentiation. There are a lot of ETFs and CDF, a lot out there. But our product is quite different. It's really gold. It's 1 gram of investment gold, tokenized point, single point. That's it. And the third, and this is more important, is trust. How do we show to our customers, no matter they are B2B or B2C, that Prosegur is a company that you can trust? Because you probably don't know, but after single euro or single euro or single dollar or single libra, pound or whatever, there is an insurance policy behind this on the counterparty. And Prosegur pays this insurance policy. So every single gram of gold is double insurance. The gold itself and the token. So this is how you build trust in the industry. Anyway, we have a lot of challenges still without solving problems, right? But we are working on that, and we expect these kind of products can reach the vast majority of investment customers.
So I think it's time to shift a little bit to, and you've all touched on it already, you know, what is not working, what are the challenges, how do we go about fixing them to be able to actually make more progress. Nadia, maybe you can start. If we think about the current regulatory frameworks, just one aspect that often gets cited as being an impediment to progress, how do the current regulatory frameworks help or hurt the tokenization initiative?
Sorry, because just for all of us, we don't hear anything when others are talking, and I was just beginning a joke that French people can understand here. J'ai failli demander c'est quoi la question, et je m'appelle pas Stéphanie, mais sorry. So about the regulation, I think when you are working in an institutional space, it's something really important for 2 points. The first one is the confidence of the bankers and the asset manager on the system and the infrastructure. And so we are working like this in TradFi, and I think it's really important. The second point is that regulation is not here to don't let people work, but it's also here to protect the investors, the retail investors and the corporate investors. So today, the point is that when we are talking about regulation in tokenization, we are talking at different aspects on the TradFi regulation, because we have regulation already on MiFID and other things, or CSD, that is not always linked to the technology, because we don't regulate the technology, but we regulate a usage. So it's something that would be difficult to understand, that we try to regulate something that could work on this technology or this technology is the first point. And there is regulation on crypto assets, and in Europe, for example, MiCA. And so when we discuss about the cash leg, if you are talking about stablecoin will be regulated on MiCA. But if you have an issuance on a digital asset, you are not in this case, and you are in the traditional financial space. So I think we need to be really clear on those points, and first to don't mitigate all the regulation or all the frameworks that we talk here, because it could be complicated to understand. It's one of the points. The second point is that I hope, and it's working in the good way, that the regulators will open the space to innovation, because if it's going to be really strict, or we don't open the floor to innovation, we will not be competitive in Europe on that space. And I will set an example. For example, we have the sandbox in Europe that named the pilot regime. I think many of us we took in the beginning that the pilot regime was very good idea. But the point is the volume and the amount that you can put in the pilot regime is really small for an institutional. And it's a really small sandbox. So if we want to have some volume and to make people wants to have more asset tokenized here, we need to try to change this sandbox and to open to more volume on more assets also. And another point, and sorry if there is some in the room, but for example, we had do an issuance in Caisse de dépôt in November 2024 in the space of the trial of the European Central Bank. And they asked us to have that issuance in a period that was not really good for the market because the rates was not good and because it was the period of the election of Trump in the US. So when regulator work with us, they need to understand that we are in a real market and we need to work in the real condition of the market. So we need to have regulators that open the room to discussion on this kind of things and to be really operational in their reflection. I think it's the first point. Now I can see that it's moving a little because we have some experimentation and trials last 2 years. And I think they begin to understand that if you want to move, they need to hear us more than they do before. And the initiative like Pontes, Appia, for example, in Europe, it's something that could help all of us because we will discuss on the technical framework, the operational framework, and the regulatory framework. And in France, for example, we have a working group with the Banque de France on that kind of things, and they understand very well that we need to push more use cases and really valuable use cases, not only the use cases that we work all on for some years. So regulation for me, it's not something that will stop the innovation and the tokenization, but it's something that you need to work conscientiously and make every actors working together there. I don't like, it was, I think, the question that I had before that I don't answer, so I will answer a little. I don't like the word where you have a silo and you will make the regulator work together, the institutional working together, the startup working together, and I think that you need to work all together because it makes you help to understand what are the limits of all the different groups. What's the reality of a bank when you are a crypto native company, for example? What's the reality of or the attempts of the regulator that could be different? Because when I talk about the regulation to protect the clients and the investor, for people in the room, they invest themselves and they have some level of culture or what is finance, it's easy. But many people don't have this luggage and it's a little bit different. So we need to work together and we need to help the regulator to work very well with us.
Thank you. So regulation obviously being one potential impediment. Others that are cited, you know, interoperability, the market infrastructure. Jose, tell us a little bit about operational and security challenges that you see hindering tokenization that could be potential hurdles.
Yeah, as I think it's part of the solution. As I mentioned before, We have many challenges in operations, as we are not only tokenizers and brokers, but also custodians. Custody is not a matter of having a custodian solution. Custody is taking the risk for your customers, right? That's why we have the only full coverage insurance in the crypto space. It's the only company that we have that, because we take the risk in this kind of crypto space market. There are many challenges in this operational aspects, right? The first one is the internal collusion. It's something that is sometimes is missing, but is the number one of the big problems that we face here. It's the same in the physical world. In the physical world of the custodian, 94 of the incidents, risk incidents that we have is with internal collusion. You know, employees involved. So in crypto space, we are very concerned about this. We use technology, we use process, we use methodology to avoid that. But sometimes it's not enough, right? That's why we work on this kind of insurance policies. This is the main problem we face. Second, cybersecurity incident. Cybersecurity incident. We use, it's public, we use JK8 solution that we have physical bunkers in Spain, in Andorra, in Argentina, in São Paulo, Brazil. We use physical bunkers and we put the logical solution inside. But we are not happy with that solution. We put some layers of software on top of that to avoid cybersecurity risks and anyhow. But this is very important because we have lots of money of third party. So that's why it's important. We are a public company. You may know, Prosegur is a public company. So we're very concerned about this kind of risk, and this is quite important especially in the crypto space. We are very exposed to this kind of attacks, as you may know. So these are our main problems that we face. First is internal collusion. Second is cybersecurity. We work on this, and we work very close to the regulator to avoid those kind of problems.
So if we want to move forward with further institutional progress in tokenization, we've got a few minutes here. Just be good to hear, what is the one single call for action that you each would have? Where does the priority need to be in filling a potential gap to make the progress move even further? So, Dotun.
I'm going to be cheeky and I'm going to choose two, if that's okay. So, and some of this actually jumps back into complement some of Nadia's comments on the regulatory piece. So I think there are two key areas that are really interesting to address, right? If we look at institutional wholesale, the sort of revisiting the jurisprudence of existing regulatory regimes that govern policy in capital markets. Today, you have a lot of assumptions baked into how policy is sort of put together and formed that assumes only certain intermediaries can fulfill the mitigation of certain risks. So if you look at the sort of introduction of CSDR off the back of the 2008 global crisis, you sort of see assumptions baked into how do we solve for the systemic risk of underlying post-trade settlement against listed trading on a credit-based trading model. That brought into the fore the assumption that you'd have to concentrate that settlement within a CSD. What's interesting, however, is DLT gives us a mechanism to facilitate atomic settlement, mitigating counterparty risk, but without the need to effectively bring in intermediaries. So I think we need a revisitation of some of these restrictions. I think when we look at, to Nadia's comments, the pilot regime and the DSS in the UK, there is an attempt to sort of go further and embrace the benefits of the technology, but there's still a lot that's left on the table in terms of were you to, for example, take a step back and say, hey, why don't we revisit the structure of the classification of dematerialization and consider widening that such that you could effectively designate any DLT as an authorized settlement system. That would give us a lot more versatility in the means by which we could leverage these technologies to solve for some of these use cases. And the second point, which again is aligned to regulation, is really looking at when we look at where a lot of the opportunities are right now in tokenization, we see that there is a broad universe of them within the private market sphere. Part of the challenge we have in speaking to some of Aaron's points is how do we get to natively digitize securities? And the way you get there is by trying to mitigate some of the legal challenges we have to be able to natively digitize certain assets. How do we ascertain the record of register for a legal instrument and ensure that change of title ownership is legally recognized by a move of the token? For equities, that can be hard in certain jurisdictions. It may be doable in companies law, but there may be restrictions, for example, in the UK, where when you look at tax law, that's then eroded. Equally, if it's real estate, you have sort of central registers that are largely land registries. You've seen movements in the Middle East to try to solve for that by bringing in structures that allow for native digitization. You've seen broader, more comprehensive frameworks around the Digital Securities Act in Germany to try to create frameworks to allow you to natively digitize assets. But that needs to go much wider and support a whole host of a range of different asset classes too. So I think those are two of the key areas that really help accelerate tokenization across the market.
I fully agree, and we have to do this at European level, right? If you look at fund tokenization at the moment, it's, well, we have Luxembourg that's leading the way, we have Germany that's doing a good job, the FCA now this week actually came with a consultation as well on a draft framework, but they're not aligned at all, and that's what we definitely need, so that will be my take.
Julien, do you have a particular thought? What would be your priority?
Yeah, I think lots of things have been said. We talked about the regulation, the cash leg, etc. But eventually, it's an ecosystem play, and we have to talk about interoperability as well. But to me, there are 5 levels of interoperability to make it happen because the ecosystem needs to work all together. So the first one, we are all aware of interoperability between networks because there's not one blockchain, there are multiple blockchains. But even on a given blockchain, it's interoperability between assets. We can issue tokens on a certain format, some others on the same format, but they're not compatible. How does that work? Then the third level of interoperability is how do we connect these to our traditional systems? And we have to make that happen, and it's a huge work. That's why it takes so much time, to be honest. And it's all a question about brownfield versus greenfield. Is it something we want to put on top of the existing systems, or is it a new rail that we're putting aside on the current systems? That's a key question. The fourth level of interoperability is the jurisdiction, and we touched base a bit, but we're talking about financial assets. They're regulated differently against different jurisdictions, and we're talking about a global technology, a global network here. So how will that work all together? And the fifth level of interoperability, to me, is over time. I mean, the bond we issued 3 years ago for project finance was a 15-year bond. What would the blockchain be in 15 years? I don't know. So how do we manage this along the way? So you can see that 5 levels of interoperability, it's a huge problem to tackle. But the more we can step up and the more we can work all together, at least on the first 2, like networks and assets, the better, because it will serve everybody in the ecosystem. And the question is not about having a bigger pie. It's about making the pie bigger, really, in this space.
Thank you. Quick call for action, Nadia.
Yes, I think the first thing, 2 days ago, I discussed with the guy who do the issuance of Caisse de dépôt last year, and I asked him what could be different and how he wants that we work on that. And it's the operation guy that work on that. And he said, the matter is, in our world, we need to know how to communicate with our counterparties and with the other bankers, with the other issuer also, and we don't have standards. They know how to play with standards. So all of us here, we need to help them to have standards. They don't need to have one platform. They need to know where they work, with what they work, in what language they work. So we need standards and we need interoperability between the different chains that we will have. I think it's very important. The second point, it's really a human point. In this room, and I'm happy to be there every year, We have only CTOs, Chief Innovation Officer, Head of Digital Assets, Crypto Native, etc. But the people who works on the operational chain are not in the room. And it was my first point that we need to bring the operational people in the room, because if they don't heard about it, if they don't understand about what we are talking here, what's the advantages to work on that, they will never go. And they have the power to decide if they want or not to tokenize their assets. I think it's really important. And so we need to open the room to the true people who are working on the desk, the true people who are working on the back offices, the true people who are working at in the asset manager portfolio.
Okay, thank you. So I see that we're at time now. I want to thank all of my panelists. It's important to acknowledge that progress is made, and it's important to also understand where work continues or where there's continued work required. I think both of those aspects will always be the case. There's no finish line. Things will continue to evolve, and by the time we get to the next milestone, there will be other challenges that need to be solved. Thank you all for joining me today, and big round of applause, please.